What's up everyone, it's Karthik at MoneyVest. Welcome on board for our market open live stream on this Monday morning. Hope you all are doing great. So if you guys can see me and hear me, just give me a thumbs up. I just want to make sure that the audio and the video is good because I am back home in Delhi. So we'll be doing my live streams and my updates for the next couple weeks from here as I'm visiting my family. So if the audio and the video is good, just give me a thumbs up and we should be all good and all set to go here. So pre-market, we are pushing higher a little bit. We've got the S&P 500 up over 10 basis points. The NASDAQ actually is dropping a little bit aggressively. So QQQ is absolutely plummeted in the last 15-20 minutes. We kind of gave back on a lot of those gains. NVIDIA flirting with 170, 250, 173. Tesla is higher over 1.5% pre-market. SoFi pre-market is also up over 78 basis points, with Palantir also flirting in and around those all-time highs at just under $152, $154 right now, with Ether also pushing to new all-time, well, just over 3,800 is what we tested out last time. And of course, $5,000 is the level that I'm watching very carefully on Ether as well. So let's just quickly pull up crypto over here. And we're looking at Ethereum at just over $3,800 right now with this, which has been a very, very strong parabolic run from Ethereum. So welcome. We got lots to discuss in this market update. We do have, of course, Jerome Powell talking tomorrow at 8:30 a.m. Eastern. He's going to be talking, giving a speech live. And of course, later this week, we have the existing home sales, the Atlanta Fed business inflation expectations. We got the 20-year bond auction. We've got the manufacturing PMI numbers. And of course, this week is packed with earnings as well, with Tesla reporting on Wednesday. So Wednesday after the bell is when Tesla is going to be reporting their numbers. Let's listen to Tom Lee. So Bitcoin could potentially get up to over $1 million per coin in the next few years is what Tom Lee's calling for. This literally just came out about an hour ago. I haven't heard this. This is the first time I'll be listening to this interview, same as you. So again, give me a thumbs up if the audio is good, and then let's dive right in on listening to what Tom Lee has to say.
Now, Tom Lee, Fundstrat Global Advisors, head of research, probably not coming as a big surprise to you, Tom. You've been saying similar things, but one of the things you're emphasizing today, the most hated V-shape bounce in history, or at least in your young, but getting older life.
Yes, that's right. I think many people, when April happened and we had Tariff Armageddon and the market went into a free fall, investors liquidated because they thought we were entering a recession. But, and as you guys had covered, like the market then staged a V-shaped recovery, which caught many people off guard because they wanted to have a chance to get in. They wanted the stock market to be like a K-shaped or flat line. Instead, it was a V-shaped bounce. And so most investors are underexposed at the moment. And they're trying to look at headlines with a half-empty view. But as you guys know, earnings have actually been really resilient, and I think it tells a very good story.
Yeah, Dow's hasn't been hitting. It has hit a new high, but it hasn't in the recent session. But S&P and NASDAQ continue to do pretty well. So there is also a perception, Tom, that valuations have returned to levels that have people worried, and you are citing an equity-weighted S&P multiple. Explain that.
Yes.
Of what? What's the equity-weighted multiple right now?
Yeah, what we're saying is instead of someone saying, oh, the MAG is making the market expensive, let's just take the average PE of the S&P of every stock, and it was around 17.6 times in 2019. Now we've had 6 what I call extinction-like events, COVID, the bullwhip supply chain effect, inflation surge, Fed fastest hikes, Trump tariffs, and then, of course, U.S. bombing Iran.
6 of them, yeah, okay.
Yeah, all of them should have wiped out earnings, but the S&P earnings have grown, and yet the equal weight PE is now 16 times. So the market's gotten cheaper in the last 6 years, despite proving they can grow earnings through 6 extinction level events.
You know, the Mag 7, though, there was a journal article that says there's a real split between the Mag 7, those that are really doing well from AI and those that aren't. And if you look at the stock performances, I think Apple's down something like 16 or 18%
Yes.
over the last year, while you have Microsoft and others that have really taken off. Do you think the Mag 7 stays together, or do we need a new terminology, a new grouping for leadership in the markets?
Yeah. I mean, to me, the Mag 7 have become household names. You know, like Apple is Apple and Google is Google, and we know the product and we know the stock. And I think they have really established themselves as consumer and business companies. And for me, Apple has been sort of quietly ready to pounce on AI, but I don't think they need to pay up for any of these models. So I think Apple is going to surprise people.
That's interesting. That's a contrarian viewpoint. People think Apple either is too far behind or just isn't going to be able to get the talent that it was. It's losing talent, not getting it.
Yeah, I mean, they didn't launch an iPhone until 2007, and mobile phones had been around for 15 years. But when they did enter that market, they completely transformed the marketplace. So to me, I think when they want to play big in AI, and when they do in that moment, I think they will change the game.
Well, so the question though is, do you think that historically they've been able to do that because it's been a hardware game largely and a bit of software? I don't want to say the software is not a huge part of it, but the question is whether you think the LLMs have become so advanced that to get there you actually have to buy somebody else to do it, or you can actually catch up. I mean, that's the fundamental question underneath all this.
Yeah, and it's also possible that LLMs all get so good that they are about the same.
Right.
And then Apple
gets commoditized. And
correct. And so then Apple comes in and says, look, we have our safety. Look, we're known for our safety rails, protecting your privacy, you know, optimizing what you want to do, make your life better. And they might come out with a version that really, you know, makes heads spin. So I think that I'm not ruling out Apple just because they're a little late.
what do you make, by the way, there's some speculation over the weekend, some reports about the first real Apple foldable phone this fall. Would you buy a foldable phone?
Yeah, I mean,
Big market in China, by the way. People in China seem to love foldable phones.
I think what I found is when you offer someone a bigger screen size, you're pushing them more towards computing and something much higher capability. And with AI, you know, we might want some of that augmented kind of reality. So maybe the time is right for, you know, a foldable phone. And again,
I'm sorry. We got a minute left after last week in the Genius Act, and you suddenly are. I don't know whether I look at you as Mr. Equity guru or crypto guru. Are you able to do both? You have been. You're going to continue this?
yes. You know, Fundstrat clients know my goal is to find them good ideas and make them money. And now I want to do that with shareholders. You know, I am dedicated to delivering a great return for anyone who invests in any of our ideas, including whether it was our Granny Shots, which is outperforming year to date and almost 1.9 billion of AUM after 8 months. And now with BitMine, I am dedicated to really making this one of the best performing stocks.
People need to. We don't have time to go into exactly how that works, but here we are, 120 basically on Bitcoin, which you used to say at 70, and you know that was a 60% move or something that you were forecasting as within the next couple of months, or at least this year. Here we are now, what, 150?
I think the 200 to 250,000 for Bitcoin still makes sense, because that would still only value it at 25% of the size of the gold market.
Okay.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years. But maybe pricing 25% of that, especially with Genius Act, makes sense.
Are you going to, I don't know, start making comments and recommendations about stable coins?
Yes. I mean, in a sense, stable coins are the ChatGPT moment for crypto, because businesses like it and consumers are adopting it. And now we see JP Morgan and Citi and getting into the stablecoin market, and the Genius Act, of course.
How would you play that?
Well, Circle is one way because it is, a standout company. They've done really well. But Ethereum is really the way to play stablecoins because the majority of stablecoins are created on Ethereum. It's over 30% of its network fees. And if Scott Bessent's right in it, he says now it's close to a $4 trillion market. That's exponential growth for Ethereum.
Ether has taken off recently. It was down at 1,700 or something like a month ago or 2 months
Yes.
ago. Now it's back almost, 36 or something?
That's right. And I know Mark Newton, our head of technicals, thinks it's 5,000's doable near term, but if you value it similar to Circle, it's more between 10 and 20,000.
So there you have it. That was Tom Lee, about an 8-minute interview on CNBC, talking about a lot of things. Now, first thing I want to touch on, we're going to start from the end, and then we're going to come back to the beginning. So $5,000, Mark Newton, Fundstrat, technical head of research. 5,000 was also, or is also, my target on Ether. That's really what I'm focusing on. And again, I don't expect that target to be achieved without any kind of pullbacks or corrections, given how parabolic this run-up has been. So even if you do see any kind of pullbacks or corrections, I mean, that for me is going to be a dip worth buying. But again, being very careful, very cautious with crypto in general, as it can be extremely volatile, extremely risky. So we'll be looking at Ether ETFs, as you've already seen me trade. I mean, last Friday, my ETH 100 shares got called away. And we'll be looking at ETHU, ETHA, ETHE, some of those ETFs to essentially accumulate, sell CSPs or buy rights to try to trade this on this momentum. So that's going to be one. The other few things that I really want to touch on is this idea of equal weighted price to earnings multiple on S&P 500. And I really don't understand why that is a metric that is being utilized. Now, as we already know, and I think a couple people mentioned this, Just Blaze says Tom Lee's always bullish. That's true. I mean, I've never seen Tom Lee actually have a contrarian view on the market, or cautioning investors that, okay, the risk reward is not favorable. Markets are at an all-time high. It's overextended. It's getting hotter. So there's never been any caution from the sentiment or the tone that he's presented. Now, that being said, he's been more right than wrong, and primarily for the reason that he is almost always bullish. And statistically speaking, 78% of times, markets indeed do go up, right? So if I'm coming out here and I'm telling you the markets are going to go up, keep buying, markets are going to go up, keep buying, 78% of times I will be right and I will be praised. Why? Because that's what the markets do. That's over a longer time frame. That's what the markets have done. So that's something to keep in mind, right? But our job is really to be objective and not just be blind bulls or blind bears, not just, okay, markets are going to crash one day or markets are going to keep going higher, but it is really just to understand objectivity. We can still have a net bullish bias, right? So for example, despite the unfavorable risk reward ratio in this market, I'm not selling or shorting, right? Because I understand that's very difficult to time and it's a very low probability trade. The win rate, the success rate for shorting and selling at the right time is very, very low. So that's a game that I don't want to play. But I can still be cautious by increasing my cash exposure, not buying at all-time highs for a lot of these individual stocks trading at expensive PE multiples, and just sitting back enjoying this market rally while also being fully prepared for what would be inevitably a potential pullback or correction. So that is something that I think objectivity does come into the equation. And again, equal weighted PE multiple 16 on the S&P 500. I mean, that's, for me, is not the best way to judge the market, because we're not in an equal weighted S&P 500 at the moment, right? It's market cap weighted for a reason, right? It's because the bigger keep getting bigger, the biggest companies keep getting bigger, and as a result, they're kind of driving this market higher. So we are getting a little bit more and more concentrated in this market rally as opposed to this broad-based rally. So yes, the actual multiple, the S&P 500's real market cap weighted multiple is around 24. The equal weighted index might have a multiple closer to 17 or 18, which would make it seem like the markets are cheap, but I'm not sure why anyone would want to use that over the market cap weighted, when in fact the reality is the market cap weighted index that we all use. And finally, talking a little bit about Apple. So I really want to know from everyone what they think about Apple, as a company in terms of like their technology. And Tom Lee did mention that Apple was 15 years late to the mobile game. Smartphones had been around for 15 years before Apple announced the iPhone. But I think it was more of the genius of Steve Jobs. I think Obviously, he revolutionized Apple's entire product lineup and introducing the Mac, introducing the iPhone, the iPod. All those were heavy hitters for Apple. But it's really over the last 15 years that we've seen, or really about 16 years or so, that we've seen Apple kind of built on the laurels of the iPhone. It hasn't come up with anything new, like a game-changing, heavy-hitting product that's really revolutionized the entire industry. Yeah, you can call Apple Watch has been very strong. I mean, with the fitness, industry kind of going crazy over the Apple Watch. But other than that, I think with artificial intelligence, Tom Lee thinks that they may surprise everybody in the future, and that may very well be the truth. But we just don't know what is actually happening with regards to AI at Apple. So it's been an underperformer. It's clearly been an underperforming company. And I've mentioned this before in my previous videos that the company that tests the most things is going to long-term be the one that's going to be the most successful. Because if you're afraid of failure, you're never going to grow. The only way you do grow and you are successful is by testing new things, by failing more frequently. And that's what's going to allow you to adapt, pivot, change strategy, and then grow from there. So that's just my 2 cents there. Just Blaze says Apple is very boring. There isn't much excitement. It just refreshes after refreshes with silly upgrades. Jobs created new products and innovated. Cook just upgrades battery. So yeah, we'll see what Apple ends up like, how it ends up performing. Right now, year to date, still down a little bit over 15% at the moment, consolidating sideways at this resistance. Then of course, there's a lot of other stocks, including Palantir, Nvidia, that are just on this move higher at the moment. We're still flirting in and around these all-time highs at the moment. So, good morning, everyone. Thanks so much for joining. I really appreciate you all. And let's just take a quick look on the portfolio as well. Again, my ETHE shares got called away on Friday, so I don't have those anymore. Of course, I've got BITX. I'm planning on buying more. I do believe Bitcoin has more upside. Whether it gets you up to $1 million, obviously nobody knows. It is possible if it's considered as a digital gold, and Tom Lee says it's right now only 25% of the total gold market, but he does eventually believe that it could get up to over $1 million per coin, which is going to be just insanity if Bitcoin eventually gets up to $1 million. And if it does, there is still about a 9 to 10x potential from here. So it's kind of like a moonshot, right? It's an asymmetric bet where you're depending on how much you want to invest, how much you want to buy. Like for me personally, like if I put in 10 grand, if it turns into 100, that's an asymmetrical bet, right? There's a low risk, high potential reward opportunity. And that's one thing that I've really realized over the last several years is that concentration obviously builds wealth. Diversification is what keeps it. You can still see diversification bring you in like 5, 6, 7, 8%, but it's never going to be sort of life-changing. It's going to be life-changing over a span of multiple years and decades, but if you are looking at wealth building on a completely different level, concentration is what's going to get you there, right? And finding those asymmetrical bets. So my strategy has evolved a little bit over the last couple of years, where I've got long-term stability, but then I've also got a portfolio focused very much on swing trading and options, where I'm taking more risk, which is going to be the portfolio in front of you. And then I'm actually considering starting a brand new portfolio, which is going to be considered moonshots, or something which is going to offer up asymmetrical opportunities where the risk is low and the potential reward is massive, right? And that portfolio is going to be like either at 0 or 100, right? There's nothing in between. But of course, a long-term stability offers diversification. It offers those long-term ETFs and index funds that I can consider dollar cost average into, whether it's Vanguard, whether it's SMH. So that provides that foundation, that bedrock. And then the swing trading is going to be more actively managed, where I'm trading more frequently. And then of course the moonshot is going to be like nothing in between. It's either food coupons or it's a Lambo. Like that's the kind of Wall Street bets analogy I can give you with the moonshots portfolio. So that is something that I am thinking about. I may start, and I'll definitely let everybody know in our Discord, but I'm going to have to come up with some crazy risk warnings, making sure everybody understands what this portfolio's main purpose is. Like, can it literally go down to 0, or it can be at 100. So, okay, again, thank you so much for joining, everyone. 10 minutes, the markets are going to open. Tesla is moving higher. Tesla is reporting earnings later this week on Wednesday. So that is going to be a very important day for Tesla shareholders, investors, and we'll see what Elon Musk has to say. about his political affiliations with White House, with Washington, and of course all the comments and the back and forth with Trump, his new launch in India, the deliveries for the second quarter, which came in, I would say, a little bit better than expectations. I was actually expecting a pretty brutal quarter, but they still came in pretty strong. And yes, we're a little bit behind target for the entire year on an annualized basis, but there were some hiccups along the way with the Model Y refresh. And of course, Elon's involvement in politics kind of taking him away from the day-to-day operations at Tesla. So there's a lot on the line with, of course, Texas launch also happening with the robotaxis and what's the next plan, the next future plans with full self-driving as well. So Tesla front and center is going to be the stock most important for this week. So thank you so much for joining, everyone. And let's see, 10x on Bitcoin would put it over $20 trillion market cap. Yes, that is correct. And that would be pretty insane to think about it. NVIDIA is a better and safer bet than Bitcoin is what Toby says. So I agree. I think absolutely. I mean, NVIDIA is an actual company, right? It's actually got revenues and cash flows and earnings, whereas Bitcoin, even to this day, yes, some people could argue that, okay, it's got inherent intrinsic value, but at the end of the day, like, it's really the supply and demand that's driving the price higher. Now you're seeing a lot of governments, a lot of financial institutions, a lot of companies getting involved in crypto in a way that we've never seen before, such as ETFs, right? So there's actual inflows happening in crypto ETFs, like $14-15 billion worth of inflows in the last couple months, which is enormous. Then Donald Trump also flirting with the idea for 401ks and Roth IRAs or retirement accounts opening up to the idea of crypto investing as well. So it's not just going to be limited to stocks or bonds. Crypto could also be a part of someone's 401k, which is driving more liquidity into the system. And then, of course, you've also got a lot of companies, right? Actual companies, MicroStrategy, Bitmain Corporation, that actually want to buy and hold crypto on their balance sheets as well. So there's just a lot of avenues that crypto is gaining a lot of momentum at this moment. Of course, with the 3 bills, the Genius Act, Non-CBDC Act, and of course the Clarification or the Clears Act, all defining very specific rules and policies and laws that are going to set the framework for crypto moving forward, which obviously is driving this move higher even more. So again, this is something which, you know, if you are a person who's dedicated their life in researching, talking about crypto and everything Ether and Bitcoin, you'll have a much better idea on, much better understanding on what the potential is here. But of course, since our channel has been mostly focused on stocks, fixed income, so bonds, we've covered macros at a very, very extensive level. But crypto is something from a tradable perspective offers tremendous opportunity. But at the same time, I want to caution a lot of investors, traders out there, there's a lot of risk involved. So just be very, very careful. I've never dabbled into altcoins. I've never dabbled into Doge. I've never bought into any of these projects, so to speak, whatever they might be. I've only stuck to the 2 main coins, which is Ether and Bitcoin, and only from a tradable perspective, right? So BITX is something that I own. I'm up more than 100% on that. Ether has moved up quite a bit. I mean, the thing is that I actually missed out on this because I was traveling last week. So my flight got delayed, right? So as you guys know, I was traveling last week and my flight got delayed and I missed out on a lot of this move, right? So I flew in on right here, 15-16. So right there, I was quite literally right there at 2,900. So my flight was on July 15th. It got delayed by 4 hours and I was literally flying out, like taking off at market open. So I missed out on this entire 28-29% move. So I mentioned this in the Discord last week that, man, with the delay and the flight taking off right at market open, I was not able to do a buy right or pick up shares of ETHE, or ETHE or ETHU, so some of the Ether ETFs, and I missed out on that move. So that was just the timing, overall timing was not great. But nonetheless, I've still got a small trade in last week and I will continue to trade more into Ether. So let's see. Tesla call 450, 500 safe still. Anyone October, December call. So Ray, as you know, that we don't, buy calls. We don't like to gamble on the fact that, okay, let me just buy calls and hope that the price is going to go higher. We essentially take very calculated, risk, which is selling options for the most part and benefiting from, market neutrality or also pullbacks or even higher. So that's kind of like a hedge for us if I'm selling calls. So I do actually have $500 and $600 calls on Tesla, but I've sold those calls. I've collected a lot of premium And if Tesla gets up to those levels, great. If it doesn't, that's also fine. Either way, you have to be okay with your decisions. So, okay, Bitcoin, Ether, XRP, Solana is what Lisan says. Yes, make sure that you drop a like, everyone. Subscribe to the channel if you haven't already. I would really appreciate that. And again, link's going to be down below if you're interested in joining our MoneyVest platform, getting real-time access to all the alerts in our Discord, members-only videos, portfolio updates. I posted week number 29 update on our Patreon. The portfolio, this right here, the one that you're seeing right now, is up over 30% year to date. 30% after 2 consecutive years of outperformance. This is the 3rd year that I'm running this portfolio. I'm showing every single trade I'm making. Every single buy and sell alert is sent out on the Discord, including all the options trades as well. So link's going to be down below if you want to join. We'd love to have you on board. You can schedule a free Zoom call with me as well if you have any questions about how our community works. What are the different benefits? What are the different tiers? What are the different educational material out there? Everything, we're happy to help. So again, email me, admin@moneyvest.com. You can schedule a free Zoom call. I'm more than happy to offer 5 to 10 minutes of my time to help you in your journey. I technically make more in crypto than working as a corporate slave, Lisan says. That's great. That's incredible. And really, the financial markets are your way to financial freedom. That's what I want everyone to think about when they are investing and trading. And oftentimes when you are first getting started and you get scarred with, let's say, those early losses, you get a bad taste, bad mouth with the markets, and you never want to invest again. And I really want everyone to overcome that, because there's so many people that I talk to that haven't invested in like 5 years or 7 years or 10 years because the first time they invested, they lost money or they got scammed or whatever, and they never touched the market again. And that is the worst thing that anyone can do for their financial future. Investing is the only way you build wealth, right? You're never going to save yourself. You're never going to save your way up to financial freedom, because saving is going to continue to erode your purchasing power with inflation. Unless, of course, you are a top-paying executive, a CEO at a company where you're earning, let's say, millions of dollars, and even then you don't invest any money. Maybe you could save yourself, save your way up to financial freedom. But investing is by far the best way to build wealth. And I really want everyone to look at the financial markets as a way for financial freedom. This is your path to financial freedom. The more you're educated, the more you learn, the more you understand how things work, the better equipped you're going to be. And don't just think of it as you're going to be doing this for 1 or 2 years. This is something that you can dedicate your life to pretty much the entire time. Everything else is going on. Your life is happening. You've got your work and family and health and everything. And this is something that you are fully aware of what's happening, how things work, and how to trade, how to open positions, how to trade options, how to invest, what is risk reward. Like, having an understanding of those things, those concepts, goes a very long way. So that's great that your crypto is making you more money. Okay, Spencer, would you consider creating voice channels on the Discord? So the thing is that on Discord, in Dubai, the voice channels don't work. So we don't have voice channels, but I am considering responding using my voice in a lot of times. Like, basically, if there's questions, I'm thinking about really using the voice feature to answer questions quickly and to give more context and more perspective, so I can offer more personalized help for people. So that is something that I'm definitely considering. Rini says, same, I've been making 2 times my day job salary trading options thanks to this channel. Thank you so much. I really appreciate that and glad to hear that. That makes me very, very happy. And that's, genuinely speaking, it makes me more happy to see all of our members, all of you guys succeed and make more money in the market. And it makes me very sad when the markets are performing poorly and everybody's down, like, not for my portfolio, but for other people's portfolio, because I genuinely want to see you succeed and make money. Anyway, so markets are open. So here we go. Tesla is pushing up almost 2%. 336 is where we're at prior to the earnings. We've got QQQs essentially flat right now. Nvidia pushing up to over 173 at the moment. This is what the portfolio right now looks like. Open P&L just over $76,000. Of course, all my Nvidia is in the money right now. SoFi is in the money as it's approaching $22, and Tesla is also in the money. One of the calls are in the money. The other one's at $340, which is most likely going to get breached very soon as Tesla takes out $340. So I'm going to jump into our Discord because I do have a lot of trade alerts to send out and a lot of updates to send out in our Discord. Again, thank you so much for being here. Make sure that you drop a like and subscribe to the channel. If you have any questions, again, email me admin@moneyvest.com or message me on Discord, and I'm more than happy to help you. Link's going to be down below if you're interested in joining us. Have a great Monday morning. We'll see you guys later this week as there's a lot happening for tomorrow's Jerome Powell speech, as well as Tesla's earnings on Wednesday as well. Thanks again. Take care. Happy investing.